Yeah. So, I mean, but really, what I'm hearing to some degree is being in the right place, recognizing the right geologic environment and the right rocks that statistically should contain more deposits, but for whatever reason are either not exposed or really hasn't been looked at, like someplace in Armenia. I mean, I remember the hill, you could see the hill and it was altered all the hill, but no one had really gone up there and looked at that, at least with your background. So how did you get the backing?
Well, when we started Lydian, so in our case, it was we knew we wanted to explore this thing, and I must say that when we started life, we had no idea there was any significant gold on this hill at all. This was a large alteration system, and then we did what's a traditional family and friends round. So we formed a company, and family and friends threw some money in it, and I think we managed to raise in that first instance £60,000. So. No one was paying themselves. We just had enough to kind of get some samples across to the lab and get some idea of what this thing was. So we did that. We got our first gold samples, and then we packaged it up in a presentation and took it to London. And to I suppose we knew in London some small boutique brokers, and there are brokers who will focus on this very early stage stuff. And we knew who they were, so we went to them and did a deal with those guys to help us raise the next round of capital, and then we took it from there.
So Eira, same question for you in a sense, but diamond exploration is so much more expensive, particularly up there in the north.
Exactly, and the Aber story is actually a very interesting one from the perspective of how it was financed, because the discovery was initially made by Diamet Minerals and BHP, who were their partners. We quickly amassed a land position, but at that time it was a down market period, and literally we used the last pennies in the treasury to stake our land position. Like, we were down to about $8,000, I think, in the treasury by the time we had acquired our position. And we thought, aren't we clever? First movers in and around this discovery, now we're going to have any number of opportunities to finance this, and this is going to be, we thought, a no-brainer that we're going to have lots of people moving into this area that are going to be interested in diamond exploration. And quite frankly, nothing happened. We moved in and we sort of waited, and then all of a sudden we started scratching our heads, and then we started to sweat a little bit because no one believed. Even at this point, they were still very skeptical as to whether or not the discovery that had been made was legitimate, and people were slow to come to the party. So we at that point, we too went to London, and in this case, we pursued a different avenue. So we didn't actually go pursuing investment from brokers or other types of institutional investors. We went to Rio Tinto. We thought BHP's got the discovery next door. This is another major company that has an interest in diamonds. They were involved in the Argyle discovery and development in Australia, and we pitched them on this concept. And again, we took our PhD geologists and we talked about the science, and lo and behold, we managed to strike a deal. Now, that deal turned out to be very expensive for Aber, because we ended up selling a majority 60% interest in that land package for $10 million. We subsequently found over $10 billion worth of diamonds on that land package. So it seems very expensive now, but it was a stay alive strategy at the time, and we were very thankful to have Rio there as a partner to lend credibility to what we were doing, and basically to finance the early high risk stages of the exploration effort. Aber subsequently managed to then stay with its 40% interest in that project and become a partner in the development. And the way we were able to do that is that we sold the marketing rights then to Tiffany. So it's kind of an interesting story how it evolved. I think a lot of people felt that as a junior company we were just going to be taken out at some stage, but we did manage to actually finance our share of a very expensive $1 billion capital investment, and ultimately went on to become a publicly traded Canadian diamond company.
Miles, let's think about your Timok discovery. Here you've got a concept under hundreds of meters of barren rock. How do you how do you convince someone to give you money for that?
I go back a little bit further. I started my first exploration company in 1991, invested all my savings and lost them. And that was a really useful lesson for me. It taught me how to be a prospect generator. And everything I've done since then, I've financed through joint ventures and partnerships with other people. And that was what we've done with everything in Lara down in South America. I mean, I don't think we've ever financed a single drill hole. And it's how we put together reservoir. We actually, in the end, we put together the land package in the Timok to go into a joint venture with Freeport. So we worked together to put the land package together on the basis that they would finance it. And, you know, they were drilling 1,000-meter holes through difficult rocks. I mean, it was, you know, $250,000, $500,000 per drill hole. I think the Chikara-Peki discovery was like the 5th or 6th drill hole. The others were complete duds. And it took them 3 goes to drill the discovery hole. You know, I would never have paid for that myself. I wouldn't have had the courage, because they're completely blind discoveries. Mm-hmm. So you have to understand just how risky this is. I mean, you know, I talked a little bit earlier before on great real estate, and you know, you go into an area that geologically, or you know, the science or whatever it is you've applied, you pick the area you want to work in, but you're still looking at no data. I mean, you're looking at the skin of a custard, and there's this ton of stuff underneath. You've got no idea what Mother Nature's put there. You can basically speculate. So you have to manage the financial side of the business in a completely different way to that which you manage the technical side.
So at what point, and this I'll throw this at all of you as well, is at what point did you recognize we actually got something here? What triggered it? And more importantly, for those of us who are, you know, investing in these stocks, how do we recognize, or how would we recognize a real discovery versus most of what we see? Miles?
Well, I mean, when the first drill holes came out of the Timok with 10% copper, it was kind of, okay.
I do recall that as being pretty obvious. But then again, it was obvious because there was a concept. We knew what you were looking for. We knew what it had to look like. And we knew if you hit it, it would be significant. And so we knew what we were looking for.
But I mean, I look at this, I mean, I've done this with my own money. I've done this for large companies. It's not a game. I mean, this is a business. You have to be doing this for a real reason. So you can't just buy a helicopter and disappear up into the jungle somewhere. There has to be a reason to do it. So we were exploring for deep covered deposits, which is a very high risk strategy, but you're close to all the infrastructure, you're close to a bunch of mines, you're close to a smelter. So you know if you found it, that there was a place for it to go, that it would be worth something.
Mm-hmm. Ira?
You know, I think in our case, I mean, it may sound like it was obvious. We found a close to 3-carat diamond sticking out of the first drill hole, which almost never happens in diamond exploration, and we'd hit a very high-grade phase of the deposit. But even at that point, we really didn't understand what that meant. And to Miles's point, you know, we're talking about a very remote part of the Arctic where there's no roads, no infrastructure. It's fly in, fly out. And understanding, you know, we had a basic sense of what our rock value needed to be, but we had a lot of work to do to actually determine whether or not that deposit was economic. So, you know, we had a good feeling because we had grade on our side. We knew when we found that diamond that this was going to be high grade, but there was a lot of other questions that we had to answer. And I think at the end of the day, we invested more than $75 million before we actually had the answer as to, you know, whether it was going to work and how much money it was going to make us. So it's...
So as an investor, if I see, okay, we know we've got a deposit next door that's being developed, that's real. You pull that first drill hole and nice diamond in there. That should be the point where we say, okay, this has really got a shot, if everything else works.
Absolutely, because we've already reduced our odds now, and you think the odds for most deposits, including diamonds, are, for every 1,000 discoveries, maybe one will actually make it to the point where you go on and assess it, and then it's another, 10% of those that actually make it to be producing mines. So I would say at that point, yes, it's definitely passed the first test, and looks like a far more interesting opportunity than many of our peers of the day. So, and we had no trouble financing the company after that.
No, that was easy. Tim?
Well, I mean, I sort of broken your question into two. So when did we know we had something? That was when we had the pit design done and the metallurgy results in. And that's because Amulsar is a low-grade deposit. So we were pulling good long intersections, 200 metres at plus gram type grades. But you still don't really know, and it's exciting stuff, but you still don't really know until you can see a pit around that thing. You can recover the gold, and that the infrastructure is working to your advantage. And then so you sort of seem to change your tack there a bit in terms of when would an investor make a judgment call as to when somebody's got something. And I would say, that's a difficult question to answer, how long's a piece of string, but I think that second drilling program is, for me at least, as an investor, is an important point in time. I think that, the first drilling program is always going to be sided on, put it this way. So the soil geochemistry, the geophysics, all that sort of information is usually there before that first drilling program goes in. That data doesn't change. That stays there for the rest of the life of that project, right through all the other drilling programs. So you would expect normally that first drilling round to be sited on some of the best locations and to pull up some good holes. So that you should expect good results in that first drilling program, or at least encouraging results. It's the second one for me that I think is important in terms of results and as to whether you think this really could be a project or not.
Yeah, it's a good point. That confirms either or doesn't confirm what you think you've got.